GC, you're a guy. Listen, really impressive stats by Paul, and it's going to make your stats look a little bit smaller, but I'm still impressed, buddy. You've got $1.3 billion worth of under management yourself. You yourself own 400 rental properties. Your company, JWB, manages 6,000 properties. You've been on the front page of the Wall Street Journal a couple of times because you invented the build-to-rent space out here. Recently acquired 20 city blocks of downtown Jacksonville because you believe so much in the overall Jacksonville market. Super impressive stuff. 100-person company. You win Best Places to Work awards. You won the Ernst Young Entrepreneur of the Year. I'm obviously your biggest fan. No big deal. But what I really want to ask you, GC, is you and your three partners have really just dedicated yourself to making the rental property opportunity easy for people and making it as passive as possible in Jacksonville, Florida specific. Can you just give me a little background of what made you fall in love with rental properties to build this company?
Yeah, well, I can tell you that it wasn't in the cards when I started this journey 18 years ago. It was never in the cards. I was not brought up in an entrepreneurial family. I went to college and expected to get a great job, and I went to go and work in corporate America, and it didn't work out for me at that job. But what also was happening at that time is, I realized through great mentors that I have, being Paul and the entire Fortune Builders team, I realized the power of what real estate could do for me. And so I was a young kid at that time. I was 22, 23 years old at that time. And I said, well, what do I have to lose? Let me go ahead and jump into it. Now, when we jump in as Fortune Builders, and for everybody to know, I was the original Fortune Builder student, even before there was a Fortune Builder student. So I know what it's like to be a Fortune Builder student. What you're trying to do in the beginning is you're trying to figure out where you sort of land in real estate, and you're trying a whole bunch of different things, and you're finding out where your expertise is. And that's what it was for me. So I didn't start out saying that I was going to own 400 rental properties and build a business that, manages $1 billion in assets and rental properties for individuals. What happened was I tried everything and I found what my niche was. But the way that I found that niche was not a comfortable process, let's say, because if we go back in years now, it was 2006 when I started. My business partners and I, fresh off of conversations with Van Merrill, Paul Shively, and the entire Fortune Builders team, and the CT Homes team at that time, we bought our first 40 single-family rental properties, and we started to build our portfolio while we were doing all these other things, wholesaling, renovating, flipping high-end homes, lease options, you name it, we did it all. But then something happened called the Great Recession. And, those were tough times for me. And what it forced my business partners and I to do was to really look at what was working well in our business and what was not working well. There were a lot of things that were not working well, so it was easy to see those things. But I remember sitting back, and this was probably 2008, 2009, and saying, okay, there's a lot of things that aren't working well. Let's look at the books and let's see what's actually working well. And when we sat down, we looked at our financials, it was those first 40 rental properties that were actually meeting and exceeding expectations. They were producing a return on investment, all while there was a real estate crash going on. And it was because rents continued to come in. People were still occupying our homes. Rents were actually increasing during the global financial crisis and the Great Recession. And so we looked back and we said, well, we spend almost no time managing this part of our business, yet it's the only thing that's working right now. And it was an epiphany for us. We absolutely fell in love with this asset class, not because of what makes a lot of headlines, which is there's an incredible opportunity to earn a very high return on your investment, but personally being more conservative, and Shively, I know you are too, you're built like me, right? Being more conservative, I love how this asset class performs in bad economic times. And so when we kind of zeroed in on that, we started to really build a team and a system and a process that could give access to everyday investors to be able to build a portfolio similar to how we started out and really focus on that client experience. And so that's been that 18-year journey for me. It certainly was not in the cards in the beginning, but through understanding this asset class at a deep level, and I think it really plays well for where we are as an economy today. People are fearful about bad economic times. This is an asset class that just performs so well when times aren't so great. And what we've also seen is that it has that incredible upside as well.
Love that. Paul, do you have like an origin story like that? Like, I mean, you are the head of the passive income club, right? Like, I know that you are really into this. You're also a JWB client. I know that you've bought some JWB properties for your family. What was your aha moment when it came to rental properties?
Yeah. I mean, my story is similar, has some differences. I was a young 21, 22-year-old kid, kind of like you had, Greg, where you had started to get into it. And I had the good fortune, much like you did, to get around Than and Paul at that age, right? Than Merrill and Paul Sajan, the heads of fortune builders. And very frankly, I just did what they told me to do, right? Because I was a young 21, 22-year-old kid, which happened to be really good because they're phenomenal business owners. But my aha moment came actually when my father got sick. I was around 24, 25, and my father got sick. And so I wanted to be able to take time off of work and go be with him, right? We weren't sure what was going to happen. And he's fine. He's great. We actually go play golf on an annual trip, and we're getting ready to go do that now in a couple of months. So we're all excited. He's good. But the same type of thing, Greg, it wasn't an external financial, it was an internal event that happened in my family where I was able to take time off of work and I still had income coming in, right? My fiance at the time didn't have to worry about, well, where are the bills coming from? Like, she worked too, but we had, where are the bills getting paid from? Well, we still had thousands of dollars coming in from our rental properties that I had done what Than and Paul told me to do. Buy rental properties, take your paychecks, start investing, start stacking rental properties every year, right? 1 or 2 a year at least, and just start stacking them because it will grow over time. And we'll show you how that happens in today's call. And I took time off, didn't have income coming in from my everyday job, but I still had income coming in from my rental properties. And that was my aha moment of, wow, this provides security, stability, freedom of time, which was really big for me at that moment. And that's when I started to really dive into the financial engineering piece. How do I put this on steroids? How do I get this to go faster? I love this. I'm conservative, like you said, Greg, but I'm also impatient. And so I like things that go well to go even better and go faster. And so that's what we're going to talk a little bit about today, which is cool, is we started to develop a strategy of how do I make this go quicker, right? Which was really, really fun. So that was kind of my aha moment for me.